Welcome to the Big Success Show. Today, how college graduates can establish credit.
Big Success with the professor and Mary-Lynn.
Here we are in graduation season, and it's kind of interesting because we think about, commencement and all the pomp and circumstance and all of that. Mm-hmm. But the interesting thing is, one of the biggest challenges college students face, new college students, is getting credit. It's kind of like getting a job. In many cases, you need experience to get a job, but you can't get a job without the experience.
Right,
it's a conundrum, right? So Similarly, you need credit to help you make major purchases, but you can't get credit until you have credit. Mary-Lynn, it is a vicious cycle. Hey, I'm George Kruger, the professor.
And I'm Mary-Lynn, and one of George's students, Leah, just graduated from college, and she's having this problem that you've been talking about. She's applied for several credit cards, and she's been turned down because she doesn't have a credit history. She says she's never borrowed before or even had a credit card, which actually should be commended. Mm-hmm. And it's kind of crazy how if you're a student and you don't put a bunch of stuff on a credit card, it actually can work against you.
Yes.
Now, if you get the credit card and you pay things off, well, then that's okay.
Mm-hmm.
I mean, you're building the credit that way.
Right.
But it does almost seem like, I'm not using a credit card. I don't want the temptation. And then it's kind of a bad thing because you don't have any way of establishing credit. So,
well, and the cool thing is we've got kind of a workaround to that whole situation that we're going to share with you today.
Right. So great question, Leah. Thank you for reaching out to us. Let's pull out the professor's whiteboard for 3 tips to establish credit. Hey, George, I'll give you extra credit if you clean out that closet. This happens every time.
Well, I could use the extra credit, that's for sure.
So 3 ways you can establish credit. Number 1 is get a bank loan.
Now, this is going to cost you a little bit, a tiny little bit, but it's going to be so worth it because you're going to have access to money when you need it.
Okay. And you say this is a way to definitely be able to get a loan.
Yes, I can't imagine a banker ever turning you down for this loan request. Okay.
Right.
I mean, it's if the banker's not insane, they should give you this loan. Okay. So here's what you do. So you're going to deposit $1,000 into an account, for example, a certificate of deposit, and the reason why, that's commonly called a CD. Mm-hmm. Okay. So the reason why we put it in a CD is because that kind of locks it away for a period of time. And in this case, let's just say we lock it away we choose 3 months. You can choose 6 months, 12 months, 2 years.
So the difference between just plopping it in the savings account and putting it into the CD with this fixed period of time is that you cannot access that money.
But you can with a penalty. But the point is there's a penalty, okay? Mm-hmm. So now you've got the money in the bank locked up for 3 months. Okay? Now, ask that same bank for a $1,000 loan, and here's the deal. You're going to collateralize it. In other words, you're going to standing behind that $1,000 loan is your $1,000 CD, and you're going to ask for that loan to be paid off in 3 months. You've got a CD coming due in 3 months. You're going to take that CD, that $1,000 in the CD, and you're going to use it to buy or to pay off the loan. Okay?
All right.
Real simple.
All you're doing is just moving the money from one place to the other.
Yes. Now, you may need to pay the interest monthly on the loan. Okay, that's okay. But you can probably get a simple loan for 3 months with a CD of 3 months.
Right.
So you don't probably have to worry about that.
The interest shouldn't be very.
It's not going to be very much.
Right. Okay.
Even if it goes up some more, it's still not going to be very much. Now, here's the thing. The reason the banker's going to do this is because your loan is 100% secured by the CD. Mm-hmm. The bank has no risk, and that's what banks like. Mm-hmm. They like to make risk-free loans, but get paid more than the risk-free rate. That's what I tease my banker friends with. But the point is, the only risk that the bank has is that you won't pay the interest cost, which is a minimal risk, and they will still make the loan without any question whatsoever.
I mean, that would defeat your purpose.
Precisely.
Because you're going to get dinged on your
Exactly,
right,
yes.
So.
And so the whole point here is you're going to earn a little interest on the CD, but not as much as you're going to pay on the loan, so you'll be out of pocket just a little bit of money. Okay?
But what you gain is that you're starting to establish credit.
Yeah, exactly right. So at the end of 3 months, you're going to pay back the $1,000. Now, you're going to up the ante. Okay. You're going to do that again, do that same thing all over again with, let's just say, $2,000. Okay.
Do you have to?
Well, if you want to improve your credit,
okay.
So you're establishing it, but now we're going to be able to borrow more by proving that we can handle a larger loan. Okay. So now keep in mind, we're saying 2,000, but 1,000 of it you already had, right? So you're making $1,000 new investment. It's going to come right back to you. You're going to do that again for, let's just say, 3 months. You're going to get the loan for 3 months. You're going to pay it off in 3 months. And over the course of the year, maybe you do this 4 times. Okay, once every quarter.
Each time
a little bigger amount. Absolutely right. And you don't have to necessarily start with 1,000. You got to check with your bank.
But if you don't have, if you're fresh out of college and you don't have, $5,000 or $3,000, don't stretch it. Establishing credit is great, but you don't want to put yourself in a position where you can't pay back the loan.
Well, keep in mind, you're always going to have the amount you loan. That's the beautiful thing about this system, right? See, I learned this actually. I did this. And I did this upon the advice of my personal banker because I started a business, my very first at-risk business, and they were my bank, but now it was time for me. I needed to buy something. And my banker said, well, I know you got the money in the bank, but you should do this because you don't have much credit. You haven't established credit yet. Okay. So, and by the way, we have some friends who, it had been so long since they borrowed money. They didn't need to borrow money. So their credit score, they couldn't get a loan.
Well,
because they didn't have a credit rating or a credit score. Because
wait, how does that goes away? I bought a house a long time ago. I had this big major loan. I paid it off. And now I haven't needed a loan for anything in forever. And now my credit is going to have a problem?
I've only ever heard of this one time, but I will tell you, we have friends, you know them, and that's exactly the situation they found themselves in. So they took out a little tiny loan. They did this, actually. They did this all over again.
Okay.
They just built up their credit really quickly. They had the cash to do it, so they could build up a pretty good amount. To me, the moral of that story is it pays to maintain a fairly constant relationship with your banker, right?
Right. Well, and I guess just going back to your, this take a little loan out. When you take the loan out, yes, the bank knows that you've got this invested in a CD, and the bank knows that there's no risk.
It's going to get reported to the credit agencies.
But does the credit agency say, oh, they've taken on a loan for $2,000, and then your credit score takes a hit?
No, because you're going to pay the loan on time.
But does your credit take a hit when you take out a loan?
No, you're going to pay because what the credit union is going to see, not the credit union, the credit scoring agency. What they're going to see is they're going to see that you took out a loan. It was paid off at the time that it was supposed to pay it off. There was never a payment missed. All of these are good factors. So all of these this is the reason why this works. What you're asking, Mary-Lynn, it's the reason why it works because yes, unless you are late on your payment or don't make a payment, everything's going to be to your favor when it comes to the credit agencies.
All right. A surefire way right here.
Exactly right.
You heard it here on the Big Success Show podcast from the professor. Okay, but we are talking about 3 ways to establish credit. So the second way is to have a savings account, not just a checking account.
Yeah, and I'll keep this one kind of short, Mary-Lynn, because it's just as simple as it sounds, right? You're just going to look more favorable to certain companies if you also have a savings account. And when I say certain companies, I mean a certain credit scoring companies, credit rating companies. So don't think that you have to stuff it full of money, your savings account. But it just seems that sometimes it makes a difference that you actually have a savings account. And I'll give you an example. I have a friend who he's actually a shareholder of the company, of the credit card company, but he got turned down because one of their parameters was you need a savings account, and he didn't have one. He had a checking account that earned interest, so he didn't think he needed a savings account. Wow. But he got turned down. I'm talking a guy in his 50s who's getting turned down for a loan, and he owns part of the company. He's a shareholder in the company. So the point is, it just seems like sometimes having that savings account in addition to a checking account means that you're more responsible, you're more likely to pay your bills on time, etc.
Right. Well, and you've got something in case of an emergency. You've got
Precisely.
Some kind of, right.
Yeah.
All right. 3 tips to establish credit. Number 3, pay early, but not too early. And we almost learned this lesson the hard way. So I took advantage of a no interest credit card deal to make a higher dollar purchase. and I was able to make payments on it with 0 interest for 6 months. Mm-hmm. So I religiously made that payment on time. And actually, I was paying a little bit early, and that's what created the problem.
Yeah, we found that out.
Surprisingly to me. So I ended up with 2 payments hitting one billing cycle, and then none in the next cycle. So it appeared as if I was late on a payment. Mm-hmm. I guess, there's not a human being going, oh, I see another payment came in. Oh, she made 2 payments. No, they said, oh, she didn't make a payment in this cycle. And then they charged me interest and a late fee. Well, when you take advantage of these, no interest deals, you get really dinged hard with the interest rate if you miss the payment.
Yep.
So we contacted the credit card company, and thankfully we were able to get everything squared away.
Yeah, so the moral to the story here is that you can pay too early. Yeah. That's what we learned, right? So you have to pay attention to the billing cycle. Once you get credit established, make sure that you check when the billing cycle closes and when your next payment is due. Mm-hmm. Because that way you're gonna want to keep your payments within maybe 2 weeks or so of that due date. Mm-hmm. Is what we were advised.
Right, because you want to make sure, obviously, that if there's any kind of delay or anything in getting that payment in, you want to make sure that it gets in at the right time. But just don't do it too early, because then it goes into,
Exactly.
Yeah. Now, if I'd have paid the whole loan off in full early, that wouldn't have been a problem.
Right.
It was just the in-between
just
cycle.
Thinking that you're paying ahead.
Right.
Okay,
so let's review the 3 tips to establish credit on the professor's whiteboard. Number 1, get a bank loan and do it in the way the professor suggested. And you can get a summary of what George told you and how to go through that process with the show notes for today's episode. Find the link in your podcast app. The second way to establish credit is to have a savings account, not just a checking account. And the third way is to pay early, but not too early.
We always hear cash is king, right?
Yeah.
Well, if cash is king, your credit capacity is part of the royal family. That's the way that's the way I like to think about it, Mary-Lynn. So watch over your credit capacity just like it's money. You know why? Because it is.
Yeah.
It's money in your pocket. It's going to help you get funding for your big success.
What are you saving up for? What kind of a fulfilling life are you hoping to lead? Take our free life purpose quiz. You'll find it at Big Success. That's big with 2 G's. Success.com.
And we thank you so much for listening today. A special shout out to our listeners in Kansas City, Missouri.
Remember, there's a song, Going to Kansas City.
Oh, yeah,
and
Kansas City, here I come.
I was a saxophonist, and that was my part.
I was trying to figure out what you were doing.
Anyway. All right. Hey, why wait? Next time, we're going to talk about how to be a big success today. We hope you'll join us. Until then, here's to your big success.
Find big success at biggsuccess.com.